Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which has just rejected to the upside from here this very strong level of previous monthly resistance, which was then broken to the upside, retested as support, and the market is now rejecting it to the upside. In fact, this level was already acting as quite strong historical resistance, being rejected to the downside here, and again here, and then the market with this impulse broke above the zone. And what we know is that previous resistance, once it is broken to the upside, becomes support. The market, in fact, tested it as support here and rejected it to the upside, which is exactly what you would usually expect in a situation like this. So on the monthly, everything seems quite bullish. However, if we follow the natural movement of the market, since we are clearly in an uptrend, what you would expect the market to do is create higher highs and higher lows, because that is the definition of an uptrend. And what we can notice here is that we had the first low here, then we had a higher low here, we had the previous high here, now we have a new higher high here. So the next logical step would be to see first a correction and then the continuation to the upside for the market to create another higher low and then another higher high. So this means that from a monthly standpoint, what we could actually expect is to see some short-term bearish price action and then more longer-term bullish continuation. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the situation is quite clear, because from a pattern standpoint, we have a very clear impulse followed by this correction. Now, in general, when you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, and we take our Fibonacci here from the low to the high of this impulse, what we can see is that at the moment the market has just entered the zone in between the 50% and 0.618 Fibonacci retracements, which is a quite strong support zone from which there is definitely the possibility of seeing some more institutional longing, which at that point could further increase the probabilities of a potential push higher away from this level. And we will be speaking about institutional longing in just a couple of minutes when we move to the commitment of traders. So for now, let's keep in mind that from a weekly perspective, the market is testing strong support, and there is the possibility to see a potential push higher, continuing this uptrend also from a weekly perspective, therefore creating a new higher low, higher than the previous one, and a new higher high here, higher than the previous one. Let's drop down on the daily time frame and see what we have. Now, from a daily perspective, the situation is quite clear. I also spoke about gold definitely a few times in the past. Very recently, I spoke about it after this M pattern when the market was here. I explained all the reasons for which we could expect first this push to the upside, completing the pattern at the neckline, which is in fact exactly what the market did, and then the continuation to the downside for the creation of a new daily lower low, which again is exactly what the market did. So at the moment, here on gold, everything has been happening as you would usually expect. And by the way, you find those previous analysis linked in description, so you can go and check them out for more free education. Now, let's go and see what we have before we go deeper into the technicals here on the daily time frame for gold and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing and how they're moving their orders. Now, what we can see here, if we look at the net positions, is that with the last report, we have just seen once again net positions getting increased. We went from having 201.9k net positions all the way up to 202.8k net positions, with another 750 longs added from an institutional perspective and 200 shorts getting closed. Now, this shows how institutions are once again moving to the bullish side for gold, and currently they're sitting with 279,000 longs compared to only 76,000 shorts. So at the moment, gold is quite strong from an institutional perspective, and there is the possibility to see some more institutional longing since, as we have already noticed, all this area is very strong support from a weekly perspective because we have the 50% and 0.618 Fibonacci retracements. This means that if we will see some more institutional longing inside of this area, that would further increase the probabilities of a potential push higher away from the zone. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. As I was saying, in a situation like this, if we will see more institutional longing inside of this area, there is definitely a possibility of a potential push higher. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I definitely wouldn't be surprised if we get a potential push higher away from this level. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.